What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. Remember that if you want a chart analysis guaranteed to be done, please read the description below. Before we begin, please take a second to give the video a like and subscribe for more chart analysis. I appreciate all those who have already subscribed and liked my videos. Just a reminder that this video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. Just a heads up, guys, I will be releasing the Vee Trades technical analysis course very soon, probably in the next month, so stay tuned for that. So let's take a look at the SPY. I'm not really seeing a lot of bullish signs on this chart any longer. It looks very bad. Not terrible, but this looks like we could be seeing lower prices. So if I put a horizontal line right at this 428, 430 level, you can see that previously this was a strong support level and prices could not break below it. Bulls were defending this level, and now it looks like we're coming back down to retest it. So at the very least, I think we're going to come back down to the 420s and see how well we get a bounce from here. If not, we could drop much lower. So we did have a channel working up right here, and then we had a break outside of this channel, but normally we don't just reverse. We usually go back up to retest the previous high, and that's exactly what we did. But then prices created a double top pattern. You can see the double top right here, just a small one, and prices just stayed within inside a range pattern before breaking out lower. So we had a channel working higher, we had a range, and then we had a double top, and then prices just got bearish and sold off. And then I think in the past week we sold off, but we came back to test the previous lows of the range. So we tested the breakout level and it held, and prices continue lower. So that's a very bearish sign, just because now we are finding resistance when prices go up. So we could be seeing lower prices. So if we do continue lower, where are we going? When I've used some measured moves, this will be the first leg down, and this will be the second leg down because the market moves in twos. And the target is right at the 425 level, like I said before. And we're going to probably come back to retest this bottom. We could make a little double bottom before seeing higher prices and seeing the reversal. But I think we're going to continue lower just because of a couple more reasons I'm going to mention right now. So we did have this bigger downtrend right here that was continuing lower. But we did not have a retest of the previous low yet. So the previous low for this downtrend is right at the 420 level, 419 level. So just like we had a breakout side of this little slim green channel, and we went up to retest the previous high of it, this same pattern is going to repeat, but for the downtrend or the bears. So we had a breakout side of this orange downtrend channel, and now it looks like we're going back down to retest the previous extreme. So either way, I'm still looking at lower prices in the market. Really nothing bullish as right now. The EMA is acting as overhead resistance also, and is pointing down, and most of the price bars are below it. So this could be start of a bigger correction. So if we do make a really large correction, where are we going? I'm gonna have to use another measured move, a bigger one. And if I were to drag it over where the start of the second leg could be, this is right at the $400 level. So I'm gonna put a horizontal line there as well. Put a horizontal line right now. So right at this $400 level is probably where the market wants to pull back to if we don't find any support at this 428 level. We are bouncing off it numerous times, so maybe this time they want to break through it. We'll have to wait and see. And this target also makes sense because there's a couple gaps over here that the market has not filled yet. So that's another reason for the market to pull back this far, to fill in those gaps. And gaps are things that the market likes to fill, and we don't always have to fill them. There's a lot of gaps even lower that have not been filled, but using the tools that I have, it looks like we can at least reach these gaps to be filled. And these gaps get filled because you can see before, in this entire up move right here, there was a couple gaps over here, and what did the market do? It sold off a lot and came back to fill in those gaps. It gives you a little target that price action could reach. So really nothing bullish on this chart as right now. We are building walls behind us because you can see that the price action broke through that little green range. It came back and found resistance. So more sellers jumped into the market. and more aggressive sellers are pushing down the market. So looks like we're going to be seeing lower prices. I think bulls are probably starting to take profits, and going to see where this market goes. But as right now, everything's pointing down. So let's go and wrap this up on the weekly chart. Weekly chart for the SPY, and you can see that since 2020 we've been in a very strong uptrend, and no one even realized that we didn't even have any really big corrections before. So we had a spike in channel in play. So normally when we get a spike, we usually see that channel in play if the market wants to continue higher, because the spike is too unsustainable. So we were in a nice channel for a few years. The EMA was pointing up, it was acting as support, and price action bounced from it numerous times. So we did come up short on the upper side of the channel, which shows signs of weakness, because before, if we bounce from the lower side, we go to the upper side, and if we go to the upper side, we go to the lower side. So in this case, we cannot reach the upper side, so that shows the bulls are weak, and this led to a little breakout of the channel. However, I'm still expecting a retest of the previous high, but I think this correction is not over yet. We got to let the correction play out. So this down move went right through the EMA. Before, we never went right through the EMA for a long time. So this shows something different, something stronger is happening in the market. We shot right through the EMA, we came back and found resistance from the EMA, and now looks like we're continuing lower. So I'm expecting that second leg down still. Looks like it's still possible to get that second leg down, as long as we don't get a double bottom at this 425 level, 428 level. We can see that second leg down and right to that $400 level to fill in this little gap. And then from there, I'm expecting a retest of the high in the form of 2 legs, so maybe another 2 legs up like that. So I think this is what's going to happen in the market. Just because we had a breakout side of this orange channel does not mean we're going to be in a bear market. I think the correction is just playing out, and the correction can be in the form of 2 legs. So when those 2 legs are done, we're going to see a trend resumption. So I'm still expecting new all-time highs as of right now. Nothing really that bearish, except the correction is still in control. And my guess where the market goes is that we make another measured move up. So if we had this leg up right here and we stop at that $400 level, I'm thinking we can make another leg up just the same size. So I think we could see another 2-year bull run before seeing a huge crash in the market. So that's my prediction. We have to wait and see how that plays out. So I think we could reach the 654 level, and that could go all the way till 2024. And I'm saying that because in the since 2009 we've been in a bull market. Okay, so let me put a channel on the chart, and if I drag this up, this is a very nice fitting channel. You can see that every time prices came to the lower side, we found some type of support. Even in this 2019 crash, prices found some type of support at the channel. And then in 2020, early 2020, went right to the upper side of the channel, which leads prices to the lower side, but we did get a breakout side of this channel. So let me zoom in a little bit closer. So let me go to the monthly chart just real quick to show you guys a little cleaner. So let's go to the monthly chart so I don't have to zoom out that crazy. So you see this uptrend channel has been in place since 2009. Okay, very nice fitting channel, this one right here. And then we had a major break outside of the channel in 2020. So normally when we get a break outside of the channel, just like we did over here, we usually go back to retest the previous high, and we already did that. So I think we're gonna get it in the form of 2 legs. Normally when you get a break outside of a channel, something like this, we have a little channel working higher, and we get a break outside of it. Normally we could go up to test the previous high in the form of 2 legs. So something like that. So we can either have 2 big legs that surpass the previous high by a lot, or we can have a channel working higher, we have a break outside of it, and we go with 2 legs just to retest the previous high only, and not have a bigger 2 legs. So as of right now, it looks like the market is doing the bigger 2 legs where we can surpass the previous high by a lot, and the previous high was back over here before we had the break. So if the market wants to make 2 legs up like this, then that measured move would make sense, and it's right at the 650 level. So that's a very long analysis for the SPY, but it is possible, and it looks like we're probably going to come back to test this EMA, which is right at the $400 level also. So this analysis does make sense, but we'll have to wait and see. Like I said before, we could get that second leg up, because this could just be the first leg of the market, and we could come back and maybe find some type of support at that $400 level. If we want to get there, I mean, we could just even surpass it or not even get there. But let's just say we do get there, then the 657 target is probably what the market wants to reach. And if it does reach that, I'm expecting the biggest crash of all time, something right around there. So in the next couple of years, just technically looking at the chart as right now with all the price bars I see, if we reach that measured move, we're going to see a bigger crash, because then the market is just like going up like this. So keep you guys updated. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.